Hello traders, you are welcome back to the Forex Geek channel. In this video, we are clearing up one of the biggest sources of confusion in trading. Okay, and that is the difference between a reversal, a retracement, and a pullback. All right, so if you have ever been caught entering a dip only to realize the trend is done, or you missed a great setup because you were not sure if price was pulling back or reversing, this one's for you. Okay, so now let's just break down each one, explain how they work, and show you exactly how to spot the difference on your charts. All right, now what is a reversal? Let us understand what a reversal means. A reversal is when the market shifts from one clear trend direction to the opposite. It's very simple. The way it sounds, that is how it is. What does it mean for something to reverse? Before, you are in a buy trend, right? Let's be very practical. It was a buy trend before. This is the daily. I had to go to the daily time frame, right? So that you'll be sure that, yes, this is actually the trend. So this was a trend. It was a bullish trend before. And then suddenly, it changed into a bearish trend. This is what we call a reversal. Very practical about it. So that's what a reversal means. All right? That's a reversal. It's when the market shifts from one clear trend direction to the opposite. So think of it as a full 180 degrees movement, right? Think of it as a full 180. So if price was making higher highs and higher lows and suddenly starts making lower highs and lower lows, that is a bearish reversal. So reversals are usually driven by a fundamental or technical shift in sentiment. They can occur after strong trends and often follow exhaustion patterns, divergence signals, or breaks of major market structure. So the key here is confirmation. A single candle or a strong move is not enough. You have to look for a change in structure backed by momentum. When I talk about change in structure, you look out a breakout from that bullish structure. Maybe we are having higher highs and higher lows before. You have to look out from a change of character, a break of structure. From higher highs and higher lows, suddenly we start having lower highs and lower lows. So the very first lower high and lower low that you have shows that a reversal is already underway. And you can see that was around here, because this was where price now formed a lower high and a lower low. So that's a reversal. Okay? Now, what is a retracement? All right. A retracement is a temporary move against the dominant trend. Now, price is still trending overall, like what we can see happen here. This was a bullish trend, right? Price is still trending overall, but the temporary movement against the dominant trend is what we call a retracement. So this is just a retracement. All right, price is still trending overall, but it needs to cool off, breathe, or correct before continuing. All right, this is another example. This was a bullish trend, right? So this was just a mere retracement. This was an impulsive move. This was just a mere retracement, and so on and so forth. So market needs to take a breather, needs to cool off before it continues in the direction of the trend. So retracements are natural and healthy in any trend. For example, if price is in a strong uptrend and pulls back to a support zone, right? This is a support zone. It was a resistance that turned into a support, right? You can see there was a break of structure here in the direction of the trend, obviously. You know, price broke above this high and then it came back to retest that resistance that have turned into a support. So perhaps price is in a strong uptrend and it pulls back to a support zone before continuing up. That is a retracement. So the easiest way to spot a retracement is by looking for price moving back toward a key moving average or Fibonacci level while the overall structure still remains intact. But if you don't use technical indicators like moving averages, you watch out for market structure, probably highs, price forming, higher highs and higher lows. You plot your trend lines. Look out for price. You plot your horizontal support and resistance levels. You plot your trend lines as well. Look out for price respecting these trend lines. respecting these horizontal support and resistance levels. Ensure that the market structure remains consistent. Higher highs, higher lows in an uptrend. If price is going to pull back, it should not go below the previous low. That's for an uptrend. If it's a downtrend, if price should pull back, it should not go above the previous high. So that is a retracement. All right. Now, what is a pullback? A pullback is essentially a type of retracement, but it is more specific. All right. It refers to a small, controlled counter trend move within an active trend. Okay, pullbacks usually offer ideal entry points when you are trading in the direction of the main trend. The difference is subtle but important. Pullbacks tend to be shorter. All right, pullbacks tend to be shorter. For example, you can see in this downtrend we have a series of pullbacks. You can see we had a series of pullbacks here, right? Okay, so pullbacks tends to be shorter, shallower, and more predictable than deeper retracements. So traders often enter on pullbacks when price returns to a trend line, moving average, or prior resistance turns support, all of that, right? Now, how do you tell the difference? How do you know if what you are seeing is a reversal, retracement, or pullback? You have to check structure. Has price broken the previous swing high or low? If so, it might be a reversal. If structure is intact, it's likely a retracement or pullback. Also, you should look at momentum. Reversals often come with strong momentum in the opposite direction. Pullbacks and retracements are typically slower and less aggressive. Then you look for volume. Check out volume clues. Higher volume on a breakout or breakdown suggests a potential reversal. Low volume dips often signal pullbacks. Then with respect to time and depth, pullbacks are brief and shallow. Retracements go deeper. Reversals change the game entirely. All right. Then you should also use confirmation tools. All right. Trend lines, moving averages, Fibonacci levels, and candlestick patterns all help identify which behavior you are dealing with. Okay. So we have already looked at a couple of examples on the Euro USD chart. Okay. We have been able to successfully differentiate between a pullback, a retracement, and a reversal. So being able to tell a reversal from a retracement or a pullback is a major skill that separates smart traders from emotional ones. Don't react to every dip or spike. Read the structure, watch momentum, and let the chart confirm your bias. If this video helped clear things up, hit that like button and subscribe to the channel. There is more price action content, strategy breakdowns, and trading tips dropping every day. Stay patient, stay disciplined, and trade smart. See you in the next video.